Let's look at Walt Disney. First off, read this disclaimer carefully. We will go to one of the Zeitgeists. You can see, massive outperforming the S&P 500. In this video, we will look at streaming. Streaming is it's a very powerful trend. We have quite a few companies here, but it is certainly the case that this is a market that will change a lot. There will be big winners and big losers, because there is a growing number here, and there is fragmentation, and you simply cannot subscribe to everything. Hence, my hypothesis is that the windows of streaming will come to the market sometime in the future, where all these platforms can be. But yeah, that is not there now. Okay, so let's look at Walt Disney. You can see not really that super impressive performance. The reason why I'm not looking at Netflix is because, in this video, is because it has already made a very big move, especially during the contagion, the lockdown. Disney was beaten up a lot because of the parks being closed, hence there could be some interesting opportunities when it comes to Disney. Okay. Let's look. Okay, so the Walt Disney Company probably does not need a whole lot of introduction, but many people are not aware of the portfolio they have. It's a pretty broad portfolio. So they have, of course, Disney, Pixar, Lucasfilm, Marvel, Freeform, ABC, ESPN, and Fox. A very good portfolio, and they have launched Disney Plus, which is their streaming service, and I do think that they have a potentially bright future in the streaming business. It all is about how they manage their portfolios, because there has been some severe mismanagement, especially in regards to Lucasfilms. Star Wars is an extremely powerful brand, but it was horribly mismanaged. And I'm a bit concerned about some of their other brands, because they are more focused on politics than giving the customer what they want, and that is a concern I have, because they do have some very valuable brands. Okay, let's look at the seasonality. This is the percentage of months in which Disney closed higher than it opened from 2001 to, well, let's go first way back into the past, 1990 to 2009. June is the worst month, then it improves, and then it really becomes super strong in October. So this, you can see this is the trend. Weak and strengthening and weaker. And you see that the overall trend has been consistent throughout history. 2001 to 2020. You can see that this cluster here is because even though 58% of the time July is actually a strong month, the problem is that when the 2 months next to it are weak, then you could make the overall case, if you take the average of these three, that it's a dicey period. But it means that this could be a nice period to get into Disney at a low price and then be participating in this usual strong part of the year. Okay. Let's look at the charts. Weekly data points. We can go very far back here with Disney. You can see that during recessions, it certainly goes down. And the very interesting thing about Disney right here and right now, and why there could be some better opportunities than Netflix, because Netflix has made a very big move, maybe due for a bit of a pullback, who knows. But you see that throughout this entire period, for many years, we have essentially gone sideways. We did have a bit of a breakout, but it was a bit of a fake breakout, and we are now slipping back into this prior battleground. You see that buyers usually step up here. This is basically the zone where buyers step in. It has worked, meaning there is some value here in Disney, and some benefits to it actually being beaten up, if you don't have a current position, that is. So as far as who's in control at this point, it is basically a standoff between the bulls and the bears, but you can clearly see that this has historically been a bit of a buy level. But also around here is where the sellers step in. Hence, it is difficult to tell how long it will shuffle sideways, but the saying is, the longer you go sideways, the bigger the breakout, whether it's up or down. There are some key levels here to watch out for. You can see that the red 200 week moving average is a clear resistance level. We are currently below it. Being able to get above it would, of course, be, a constructive development. The accumulation distribution line actually is showing some pretty significant bullish sentiment here, so there are quite clearly some big players viewing this as a bargain opportunity. There is a powerful 81% positive correlation with S&P 500. That is kind of strong, but to be expected. Disney is a big company, big stock. Okay, here are the daily data points. Pretty clear resistance level here. The red 200-day moving average, rally, surgical test, failure. Unfortunately, we do slip below the 50-day moving average. I would have very much preferred for us to support, but we didn't. Today we are trying to get above it. We are currently above it, but you can see that earlier this day we were actually significantly higher. We are potentially forming an inverse hammer here. That is not ideal. You could make the case that this is a head and shoulders pattern, shoulder, head, shoulder. We were in a bit of a weak season, monthly seasonality. So the bulls basically have a lot of work to do, and they should have some sense of urgency now. They can't be goofing around making these inverse hammers at this point. So the buyers need to step up. But longer term, I am speculatively bullish on Disney. The problem I have with Disney is, even though they have very powerful brands, this is a great example of a company that is big into a certain kind of postmodern culture, which I think, and this is more of a general theme that you can think a bit about, is that there is this culture of cowardice and weakness, timidness, and that's something I just do not like. And we see that with Disney, is that they're just behaving as if everyone is made out of porcelain, and it's just this. I mean, they have warnings on all kinds of movies now, as if people are completely unable to know that there have been changes throughout history. It's just so strange, especially for me, coming from Norway, which is, Viking, a badass, and more masculine culture. It is strange, very strange. This is supposed to say Amazon Prime Video, 2006 is when they come out. Then you have Netflix, Upstream, and Apple TV. Hulu and Roku in 2008. HBO Go 2010. BitChute, more of a decentralized competitor to YouTube. Then Disney Plus in 2019. So the problem here is that you have a lot of players, and there's many I don't even have on those in this list. That's a lot of subscriptions. This is not a functioning model. This is why I do think that, even though I am very bullish on streaming long term, I do think that this is definitively a space where there will be massive disruption. I hope that some kind of Windows Windows operating system brought a lot of peace and system to the PC world, because there was a potential of full-bore operating system chaos. I hope something similar will happen to streaming, so that all use the same program, and then sort of like the iTunes model or the Spotify model, where the shows you watch, so you pay one price, and then how much money goes to Amazon or Netflix is all dependent on which content you watch. Something like that, I think, is the future. Music, you do have Napster, which was the pioneer, but it was shut down. I mean, I remember that Napster, and it was, of course, basically illegal. It was about pirating, and that's just how it is. Later on, you had the Pirate Bay. It was the same thing, of course. It is nice to get stuff for free, but obviously that's not a functioning economic system long term. iTunes, 2001, a groundbreaking business model, but certainly seen some massive competition from Spotify. Spotify is a better business model than iTunes. And then you have Tidal. Okay, so let's look at some numbers here. Options are available for Disney, and it is shortable, hence you could use option strategies that actually benefit from it going sideways. That's a very flexible market, the options market, and this is a very liquid stock. Market cap is big, 78 billion. No. Market cap 206 billion US dollars. You can see that the peg is a bit stretched. The debt is also something to think a bit about. If you look at the price targets, so you can see that the stock is currently trading at $113-ish, but the analyst price target is 8% above. That's nice. If you go over to Saks.com, they do have a number 5 strong sell on Disney. That's not bullish. D value score, D growth, and F momentum. So the fundamental analysts are not really feeling the love yet for Disney. The dividend is okay, 1.6%, but not like super juicy. It's not a big enough dividend to like say that Disney is a dividend stock, really. Yeah, that's so basically my take on Disney. I love their IPs, but I am concerned that they could do something similar to Star Wars, because basically what happened with Star Wars, to sort of get to know the picture. The first 3 Star Wars movies were iconic, groundbreaking. They were one of the biggest money machines in history. It was absolutely spectacular, the amount of money they made. Huge. Then, after the first trilogy, the second trilogy comes out, 1, 2, 3. Then the fans started to become a bit upset. And there was a lot of antagonism. It wasn't as popular and as riveting as the first 3. And then after that, Disney had a decision to make. They could either tap into the narratives that were part of the first 3 movies, which were groundbreaking, or they could do something else. And what they did was very divisive, and the amount of money they could have made was, they left a lot of money on the table. Very unfortunately. And they do also have other IPs that I'm a bit concerned that they're just going to do the same thing, especially now when everything is like hyper politicized. Okay, so currently the moves here on the S&P 500, we do see some rally here today as well. Though we do have this is like the big candle, the big ominous candle, and we have still not been able to get above it. So we're still shell-shocked from what happened back here. Until we get above this level, we're basically just in the battleground, trying, to recover from, the massive shell shock. But this, there is some constructive development here. If we do close above the 20-day moving average in purple, that would be constructive. So yeah, the bulls are definitely fighting back. If we go here to the SPY, like that, to look a bit at seasonality. We have done it before, but let's do it again. Okay, like this, okay, like this. You can see that we are, well, July is one of the more decent months. And then you can see that August, September, there is some general improvement into the later part of the year. Whatever you do, of course, don't fight the trend, and may the trend be with you.